If you're American and you earn money online, then I'm going to tell you something that most expat creators won't. Moving abroad does not stop the IRS from taxing you. Unlike Australian entrepreneurs or British entrepreneurs, American citizens are taxed on their worldwide income. Doesn't matter if you're in Bangkok, Batumi, Bali, or anywhere else in the world, the IRS is still going to want its cut. But there is something that most people don't know. There is a legal mechanism within the IRS's tax code that dramatically reduces how much tax you're going to have to pay on your foreign income, and it combines perfectly with the Georgian 1% tax structure. Now, this combination creates one of the most tax efficient setups possible in the world for American entrepreneurs who are traveling, and in this video, I'm going to break it down in detail and show you exactly how you can achieve it yourself. For those of you that are new here, my name is Dylan. I'm 23. I'm an online business owner. I'm Australian, not American. However, what I'm about to tell you applies specifically to US citizens. I've been living in Georgia for a little over a year. I pay 1% tax here. I own property here. I've set up my banks here. Everything that I run operates from Georgia. So in this video, I'm going to give you the full breakdown on what that structure can look like for a US citizen and how to minimize those taxes. I also run a community here in Georgia on School, which you can find in the description, with over 160 members for networking and for breaking down in further detail the structure around Georgia. And many of the members in that community are using this exact setup from the US. So the four things I'm going to cover in this video are: 1, what exactly makes the IRS and the US tax system different from everywhere else in the world? 2, the Foreign Earned Income Exclusion. What is it? Who does it apply to? How does it work? 3, how can that Foreign Earned Income Exclusion apply to the Georgian setup and the 1% tax that we pay here in Georgia? And 4 is going to be the honest limitations, who this might actually work for and who this is not going to be a good fit for. So let's jump into number 1. So number 1 is the main thing that most expat content gets wrong about the US, and that is that the US operates on a citizen-based tax system, one of the only 2 countries in the world that does that, which is a terrible setup for those of you who are from the US. But what it actually means is that if you are a US citizen or green card holder, you're going to be taxed on your income no matter where you are in the world. Even if you've moved your residency away from the US and set up overseas, you're still liable to pay the IRS taxes and form many forms to them in your annual returns, rather than somewhere like Australia, where once you move your residency away, you cease your tax residency, you no longer need to pay taxes. Now, the standard federal US income tax rates go up to a little over 37% for people in the top bracket. It's progressive in brackets up to that. I'm going to put those brackets on the screen here for the current tax year. And there's also an additional tax of 15.3% for self-employment. It's a self-employment tax of 15.3% up to, I believe, $168,000. So in real numbers, for a self-employed American making around $80,000 per year, you're going to be getting taxed twice. 1, your progressive federal tax rate. 2, your self-employment tax. And your total tax burden at around $80,000 is going to be roughly $24,300, and that's before state taxes, depending on which state you're set up in, which state you live in. Now, at $100,000, it's going to be around $31,100, also before state taxes. So it's quite a heavy tax burden in the US. However, what's important is that there is a legal mechanism that most Americans don't actually know about or don't utilize when traveling, especially when spending time outside America, to minimize those taxes. And that is the FEIE, the Foreign Earned Income Exemption. Now, what this does is it allows American citizens and non-resident aliens to be able to exclude a significant amount of their foreign earned income from their federal taxes. I believe this year, the limit is just over $130,000 can be completely excluded from your US taxes. Now, what this means in practice is that if you're earning $80,000 or $100,000 abroad and you're not living in the States, but you are a US citizen, you can apply the FEIE and completely write that $80,000 or $100,000 up to $130,000 off from your tax bill. So your US tax on that income is then set back to 0. Now, there are 2 qualification routes that are very important for the FEIE. Number 1 is that you have to spend at least 330 days per year outside of the United States. So you cannot be living inside the United States to apply the FEIE. Now, there's a second route called the bona fide test, and this means that you have to be a bona fide resident of another country continuously for an entire tax year. So you have to set up genuine and real tax residency in another country, prove your intent to leave, get your lease agreement, get your business, get your banking, and have a very clear line and proof of residency in another country for the entire continuous tax year. So those two are very important. Now, one critical caveat for the FEIE that most content actually misses is that you are not then excluded from the self-employment tax. You're still liable for that 15.3% self-employment tax, but you are no longer liable for federal taxes once you apply the FEIE. So you will still need to pay that self-employment tax to the states, but that is it. Now, there is a workaround for that. If the country that you move to has what's called a totalization agreement with the US, look into that, speak with your accountant, see if the country you're considering does have that agreement. Georgia does not, so you are still liable if you're in Georgia using a Georgian IE structure to pay your 15.3%, but it's much, much better than the federal tax. And then we're going to combine that with the Georgian structure. And here is exactly how we do that. So as an American, you can enter Georgia for 365 days with no visa. And as soon as you arrive, you can set up your business and your bank account, and you can register for what we call small business status. Any personal business with small business status in Georgia pays 1% tax, which is much, much better than America's progressive rate. So now you're paying your 15.3% self-employment tax and your 1% Georgian IE tax to Georgia. You'll become a tax resident in Georgia, set yourself up there, get yourself a lease, register your business, get your bank account. You can do all of that within a day when you arrive. And now you can combine the FEIE tax discounts with the Georgian tax system to take advantage of that. So this way, at your $80,000, instead of paying over $20,000 in federal taxes alone, you're going to only be paying 1%, which is $800, plus your self-employment tax. So at $80,000, you're already saving over $20,000 per year in taxes as a US citizen by using this structure. Now, on top of that, you obviously have the cost of living, which I'm not even going to dive into in detail in this video, but it is very easy to live in Georgia for less than $1,000 per month cost of living. That's your rent, food, groceries, gym, everything covered. So you can very easily live for less than $1,000 per month, plus you can take advantage of these massive tax benefits. Now, there are a few things that I want to be completely upfront about, because there's a lot of content around these exemptions and around different countries that do not cover the potential downsides or the things that you are likely to miss. So number one is that, like I said, that self-employment tax does not just go away. You will still need to pay your self-employment tax to the IRS, okay? The IRS is going to want their piece, and that is it. Like I said, there are some countries where you won't need to pay that, but it's very unlikely you will get such a favorable tax rate as you are in Georgia. So it will likely balance out. You will still get a significant tax reduction, but you will still need to pay that, which you will need to pay in the States anyway, plus federal tax, plus state tax. Number two is that you must actually live abroad, okay? The physical presence test and the bona fide tests are very serious. You need to be spending at least 330 out of 365 days a year out of America, which leaves you about 1 month a year that you can go back and visit. So you need to be prepared to do that before you leave and try and take your taxes with you. You need to be very certain that you're not going to be going back to America for any more than a month, which means that if you need to be there to work, if you need to be there with your boots on ground business, you have a brick and mortar store, something like that, this is not going to work for you. You need to be able to work completely remotely and spend most of your year abroad. Now, the third limitation is that you still need to do a very detailed check on your state regarding state taxes. Some states have very aggressive rules and laws around still being a resident of the state once you've still left the country. So you need to be very careful, check in on your state taxes, make sure with your accountant that you're good to go from whichever state you're in and registered, that you can just leave there and stop paying those state taxes, because there are some cases where people have left, but the state still comes for their taxes. So be very careful about that. The fourth point is that this is a complicated setup, and it is absolutely worth the time and effort to have this looked over by a professional. If you want a Georgian professional, feel free to reach out to me and I can connect you with the lawyers and accountants that I use. Otherwise, get someone in your home state in the US and also someone in Georgia just to review your final setup, especially once you've got it all lined out and you're ready to go, to make sure that everything ticks all the boxes, because you do not want to be dealing with the IRS chasing after you for however long. You know, the IRS, they take this shit seriously, so do not miss a beat. Make sure you look over everything, have it all reviewed by professionals, and get the green light. So with that, a few ideas about who this setup is perfect for. If you're an American and you have an online business, maybe you do remote sales, maybe you do e-com, you're in one of these industries where you can work completely remotely. You either have ideally multiple different clients or, you know, employers overseas, and you could even potentially work for many clients around the world, and you could run your own contracting sort of setup. Then this is going to be perfect for you. If you're an employee, it's going to be a little bit more difficult depending on If the company you're an employee for is willing to change your status on the books, depending on the way that they're willing to structure it, again, you're going to have to look over that with a professional. But if you're a small business owner, you work remotely, and you have no obligations in person in the US, this is going to be a perfect setup for you. So if it sounds like this is the type of setup that may work for you, there's two resources which I've put in the description of this video. Number one is my school community. Like I said, there's over 160 members in there, many of them from the US. So jump in there, chat with some people, join our weekly live calls, ask some questions, and get some info there. Number two is the fully customized guide, which is also in the description. It's fully personalized to your situation. You answer 30 questions about your income, your home country, which is in this case probably going to be the States, and a lot more details about your situation, and you get a fully customized guide to you, telling you the best steps forward. So check out those two resources. They will likely be very helpful for you. If I've missed anything, if you have any questions, leave them in the comments. I hope I've covered the bulk of it, and I appreciate you watching the video. I hope it helps, and I look forward to seeing you in the next one.